Intro music. Hello and welcome back to African Entrepreneurs Market. If you're new here, don't forget to hit that subscribe button and click the notification bell so you never miss out on our latest content. Today, we're diving into a crucial topic for anyone doing business in Zimbabwe: understanding the taxation landscape. Navigating the tax system in Zimbabwe can seem like a daunting task, but don't worry. By the end of this video, you'll have a clear understanding of the key taxes that affect your business, how to comply with them, and some tips to manage your tax obligations effectively. Let's get started. Corporate tax. Let's begin with corporate tax. In Zimbabwe, corporate tax is levied on the profits your business generates. As of 2024, the standard corporate tax rate stands at 24%, but there are some exceptions, such as companies in special economic zones, which enjoy reduced rates. For example, manufacturing companies in these zones pay a lower tax rate of 15%. To stay compliant, ensure that your financial records are meticulous. This includes keeping track of all income, expenses, and deductions throughout the financial year. If you're unsure how to manage your records, investing in accounting software or hiring a professional accountant is a wise decision. Value-added tax, VAT. Next up is value-added tax, or VAT. If your business's annual turnover exceeds $60,000, you're required to register for VAT. Currently, VAT in Zimbabwe is set at 14.5%. This tax is charged on most goods and services, and businesses are required to submit VAT returns regularly, either monthly or quarterly, depending on your turnover. An important point to note is that failure to register for VAT or submit VAT returns can lead to heavy penalties. So, if you're just starting out, make sure to monitor your turnover closely and register for VAT as soon as you meet the threshold. For example, if you own a retail business and your sales are picking up, it's essential to stay on top of your turnover and prepare for VAT registration. Not only does this keep you compliant, but it also allows you to claim back VAT on your business expenses. Pay-as-you-earn, pay tax. If you have employees, you're required to deduct and remit pay-as-you-earn or pay tax from their salaries. The pay system in Zimbabwe is progressive, meaning the more an employee earns, the higher the tax rate. Currently, the highest marginal tax rate for individuals is 40%. Employers must ensure they're deducting the correct amount from their employees' wages and remitting it to the Zimbabwe Revenue Authority, ZIMRA, by the 10th of each month. Failure to do so can result in penalties and interest charges. To give you an example, if you have an employee earning 100,000 Zimbabwean dollars per month, you need to calculate the PAYE based on the tax brackets provided by ZIMRA and remit it timely. Software solutions like payroll management systems can simplify this process. Withholding tax is another aspect to consider, particularly if your business deals with payments to non-residents or engages in contracts. This tax is deducted at source and remitted directly to the tax authorities. For instance, if you're paying dividends to shareholders or paying contractors, you might be required to withhold a certain percentage and remit it to ZIMRA. The standard withholding tax on dividends is 10%, but this can vary based on double taxation treaties Zimbabwe has with other countries. It's important to be aware of these requirements to avoid penalties. Import duties and export incentives are critical for businesses involved in international trade. Zimbabwe imposes import duties on goods coming into the country, with rates varying depending on the type of goods. For example, luxury goods typically attract higher duties, while essential goods may benefit from reduced rates or exemptions. On the flip side, if your business is involved in exporting goods, Zimbabwe offers incentives to encourage exports. These may include tax rebates, duty drawbacks, or export allowances. To take full advantage of these, it's important to stay updated on the latest government policies and ensure your paperwork is in order. Compliance is key in Zimbabwe's tax system. ZIMRA conducts regular audits, and non-compliance can lead to severe penalties, including fines, interest on unpaid taxes, and in extreme cases, criminal charges. To avoid these, always file your tax returns on time, pay any taxes due, and keep accurate records. For example, if ZIMRA finds that your business has underreported its income during an audit, you could face penalties of up to 100% of the underpaid tax, plus interest. This could severely impact your business's financial health, so it's better to stay compliant from the start. Given the complexity of Zimbabwe's tax system, it might be beneficial to engage a local tax advisor. These professionals are well-versed in the latest tax laws and can provide tailored advice that suits your specific business needs. Whether it's optimizing your tax liability or ensuring compliance, a tax advisor can be a valuable asset. For example, a tax advisor could help you identify eligible tax credits or deductions that you might otherwise overlook, thus reducing your overall tax burden. In summary, understanding and navigating the tax system in Zimbabwe is crucial for any business operating in the country. From corporate tax and VAT to PAYE and import duties, each element requires careful attention to ensure compliance and optimize your tax obligations. Remember, the key to staying ahead is keeping accurate records, staying informed about the latest tax regulations, and seeking professional advice when needed. If you found this video informative, please give it a thumbs up, share it with your network, and subscribe to our channel for more business insights. Have questions? Drop them in the comments below and we'll be sure to respond. Thanks for watching, and we'll see you in the next video.